we just had lunch not too long ago, so I definitely will not bore you, but I think this will be one of the most exciting sessions for the day.
I hope so. Pressure.
So, we are thinking about how we scale up organizations within Africa, and I've got an amazing panel with me today. We're going to deep dive into the topic, as well as see what we can do differently to make sure that organizations or tech organizations would last the time, will be legacy in the continent that we come from. So, with me today, I have Abdighani. He's got a PhD from the University College of London. He's got a Global Executive MBA from INSEAD, ex-IBM, ex-Amazon, has done some amazing stuff. And so I'll start with you, Abdighani. You've built machines, you've built machine learning, financial services, products for IBM and Microsoft, as well as Amazon. Was there a gap in finding human capital? And how did you develop folks within the countries that you set up? And what does this mean for the future of the continent of Africa?
Yeah. Thank you, Harry, and it's a real pleasure to be here. I'm really glad we're having a discussion around human capital. Given where discussions are with AI, I thought it would be AI-focused and AI agents particularly automating all workflows. But really, human capital is critical. I think there's an adage that goes, it's all about the people. And when it comes to scaling, your first 10 or 20 hires are just so critical to setting the foundations and culture of a company. So I'll talk about a few experiences that I've had around hiring really talented Africans, both at large corporations and startups. Typically, what I found was I'd be hiring for two types of role, either roles that required quite a lot of expertise, like a research scientist, or more of a junior role that required maybe just an entry-level role for engineering or operations. And what I found was that, and this is, I think, an experience shared by others on the panel here, for some of the specialized roles, you do end up having to hire from abroad, simply because they might not have had the exposure or the number of years of experience. However, what I found when I was at IBM as a scientist there was we had a plethora of incredibly talented young people from some of the best universities on the continent, University of Nairobi, University of Lagos, and they would come in as engineers and very quickly work with scientists and pick up how to do R&D. So very quickly they started writing research papers, publishing at premier conferences and writing patents. And I think the best thing that I did while I was on the continent was really seeing, I think it was probably about 70% of them, head off to universities in the US and the UK to do their PhDs. So that's I think one of the key things I was able to achieve. What does that mean for the continent? Of course, it's not a good thing. You have brain drain here. You have some of the best and brightest who end up cutting their teeth on the continent, developing core technologies, going abroad, right? They've all gone to, UMass and Oxford and other places, and this is a good thing. But I think at the same time, it's a bit of a concern. What I think Africa is going to follow is very similar to what other continents and countries like India followed, which was initially a huge brain drain to the US and to other markets, and then eventually a boomerang effect where you have some of the folks who've spent a number of years developed technical and operational expertise and excellence coming back to the continent to set up companies and institutions. And I think the next phase, which we're seeing in India, is local grown, if I can use that word, students from top universities on the continent, your Cairo universities, your University of Nairobi, going straight out from these universities and building really, phenomenal world-class companies. And we're already starting to see some of that. Two examples are Paystack, which is, I think, a story that's shared quite a bit. Two young Nigerian engineers built a company that ended up being acquired by Stripe for 200 million. So that really shows, the ingenuity and the capability and the talent. Talent really is equally distributed in the world. It's really just a matter of giving folks the opportunities to be able to try and implement. I'll stop there.
Amazing. So it means we have the talents. Africa's got diverse talents from diverse backgrounds. The most important thing is creating that enabling environment for them to be able to thrive, for them to be able to be creative, and then step out of their comfort zones in creating innovative solutions. Now I'll move to you, Yinka. So Yinka works for Amazon, Amazon's expansion into Egypt, South Africa. He's the one leading such transformations. So when I think about technology, I think about last mile delivery, right? So what are the biggest barriers to scaling commerce in Africa? I know we sometimes have unreliable addressing systems. I also know that sometimes access roads are challenging. And then also even proof of delivery. If someone delivers at my doorstep, how do I ensure when I come back, I'll be able to pick my package up? Yeah. That's a major challenge. So how have you approached these kind of challenges when you were launching into African countries?
Yeah, thank you for that, and thank you for having me. I think we are always very humble in our approach. I think when you think Amazon, Amazon has a way that they do business. Everyone knows Amazon for a specific experience. I think to deliver that experience in a new country requires you to be humble. You can't take the same approach where in the US you have a reliable, in quotes, reliable postal service that allows you to almost guarantee the time that you would deliver it. And even more so, you can deliver unattended. Nobody has to be there, and you will trust that the box will still be there. I think when you look at other countries where it's different, and I think that's perfectly fine, you have to adapt there. I think addressing is a great one, where you go into a new country and the addressing system might not be reliable. The way in Egypt, the way we used to take addressing is customers would provide us the address and they would give them a free form to give us instructions to be like, I am at XX Main Street, turn on the left, turn on the right. When you get there, you see me. So like you have to give customers that. And I think it's trying to meet the customers where they are. And when we think about our addressable market, I love the 1.4 billion number. It sounds big. But when you think about your ability to deliver, I can't deliver to 1.4 billion people today. I don't have the right addressing system. I need to build that over time. So you meet the customer where they are. You give them a free form, let them give you instructions, and then you ingest that into your understanding of that. So now the customer doesn't have to give you instructions the second time. I know how to get to them because I've ingested it. In South Africa, I think one of the things we've done is addressing is tough. Like addressing is quote unquote better in South Africa, but the reality of it is, folks, you still struggle to get it to certain areas. So there's certain areas where we choose not to deliver because I can't guarantee you that I'm going to deliver it on Tuesday at 6 p.m. And if I can't guarantee you that, I am not going to give you that promise. So what we've done is we've partnered with other startups where we do pickup points. I can't get it to you, but I can tell you where I'm going to be at a certain time and you can pick it up. And you learn a lot from that. As far as proof of delivery, that's an interesting one. I think one of the things we uncovered is typically if I deliver faster than I promised, it's a good thing in the United States because it's unattended, you can drive it. In South Africa, we delivered early and customers are angry because like, I wasn't home. Like, why would you send it when you told me you were going to be here at this time? It's like showing up to someone's house unattended. Like, why are you here? So it's one of those things where we actually had to do 100% attended delivery, where we actually give the customer gets a code that they give the delivery driver. They input it before it is guaranteed as delivered. So there are checkpoints that the delivery driver is also confirming they delivered, and the customer is also confirming. So it's almost like a contract where it's like you delivered it, we delivered it at the date that we told you to deliver it, and you now confirm that you received it. So if you call us and say, hey, I didn't receive it, it's like, well, you got the code. So, and even then, you always trust the customer. If it's like, hey, I gave the code or the code wasn't there, you still do what you can to like meet the customer. And that's the way to build trust while trying to solve for an ongoing issue. Hopefully in the future, I have an ability to where you can just tell me, you can just pin the location and I'll deliver it to you and I don't even need your address. But we're not there yet. But by the time we get there, maybe I can get to 1.4 billion. But for now, I'm still working.
That's a big market, so you definitely need to get there.
Exactly, yeah.
So before I move to my next question, I want us to give a round of applause to MoneyPoint. They are sponsors of this year's event. Yeah, you can see them there, MoneyPoint.
Thank you to my procurement team.
And of course, my next question goes to Didi. She's the VP Corporate Affairs for MoneyPoint. So obviously, I need to clap, so next year she will sponsor me again. So Didi, when it comes to policy and regulations in Africa, it's 54 different countries, different regulatory compliance, etc. And we've also seen that startups across Africa, there's a huge rise in startups across Africa. So beyond the tax breaks, what is one specific regulatory challenge that you think if we overcome would allow a tech company to scale in Africa?
Sure, can I solve what we were discussing before we got in here? I've been waiting. I told them a joke. They said he was dead. I want to tell you the joke.
Oh,
tell
no.
me if it's...
You don't want to hear this one.
Knock, knock. Arch. Bless you. Okay.
That was a dry one.
Good,
Thank
good.
you.
Not too bad.
Oh,
Not too bad.
weak.
Okay.
I guess we were wrong. We were wrong.
Thank you. But back to the question. One thing, so I work for MoneyPoint, and for people who don't know what MoneyPoint is, a good example is Square in the US, so it's like Square and Cash App in one, or Revolut, actually. Someone compared us to Revolut recently. And so we've done really well in Nigeria. But every time we think about going into a new country, and we're in the UK as well, we have a remittance product. But every time we think about going into a new country, we think about all of the things you have to do. And it's like it's actually building a new company. And you think about Nigeria that's massive, and if I just turn on yet another product, I'm earning way more money than going into yet another market. So one low-hanging fruit that we talk about every time, even though it's not as low because it requires loads of countries to come together and make decisions, but it's just harmonizing licensing, right? And Rwanda and Ghana they got an MOU recently that allowed you set up in one country, and then it meant that you could easily do, I believe, payments in the other country. So we're seeing MOUs like that, and I believe that's something that would really work. But outside of harmonizing licensing, there's something that I've been thinking about government-driven procurement for startups. You see that in the UK, where there's a website, the government is constantly thinking about how to work with startups when they have projects, because the government is pretty much one of the largest buyers of technology. In the US, I believe Cloud scaled because they worked with NASA. And you see that with Palantir and the US government. What I see here is if governments can sort of democratize and open up opportunities to providing technology services, then you have smaller startups get that opportunity early. You get early scale, there's better proof of concept without the pressure of, oh, hey, working to 50 billion people. And I think it's worked really well in the UK. I don't see a lot of it in Africa. And that's one opportunity that could really help. There are loads of startups doing brilliant things. They need one big break or one small break, but they need a break. And yeah, that's something.
Well, congratulations to Ghana and Rwanda for actually signing the MOU. We are hoping it actually gets effected as soon as possible, because it's one thing signing the MOU, but then it gets relegated to the...
Fair enough.
Yeah, I'm from Ghana, so I know. No bad blood. I'll come back to you, Abdighani. In terms of access to finance, we know that our region has, and I dare say 75 to 85% of it is very informal, right? So in terms of access to finance, is it easy to access funds, or are lendings easy and smooth, considering that this is a big informal sector that we sometimes do not have control over?
Yeah, thank you. And unfortunately, unlike Didi, I didn't come prepared with any jokes. I did have a penguin one, but it didn't land too well, so I'll keep it to myself. Depending on which reports you read, I think the number that's floated is about $300 billion a year that's missing in terms of financing for consumers and SMEs. So there's a huge gap. As Sanjeev Gupta educated us this morning, there isn't a sparsity of money. In fact, there's 4 trillion, I think was the number he quoted, in various places, from sovereign funds to savings. But it's really a matter of access right? So what do we mean by access, particularly in the informal market? It's really about are there necessary footprints, as you would have in any credit bureau, to provide someone and credit score them. This has been a topic funded by the IMF, World Bank for a number of years to try and provide folks in markets where there is a paucity of data, some kind of credit score. So if we step back and say, okay, well, what is the problem? First, it's a matter of infrastructure. There is probably about a dozen credit bureaus on the continent, from TransUnion, Credit Info, Metropole. Many of these credit bureaus don't even have positive credit information for citizens, right? So right off the bat, if you do something bad or you miss a payment, you get listed on there, and they don't always refresh these databases. So it's a bit of a challenge right there, right? Secondly, it's a matter of how lenders start to go about extending credit, right? So if you're a business owner, if you have a bank account, they can see your transactions, your financial behavior, so on and so forth. So you have access to that. For those in the informal sectors, those who run businesses and use their own accounts as their balance sheet, it's a bit more of an unfortunate problem. But it's not a problem, but it's an opportunity, as some would say. And in countries like Kenya, for those of you who are from Kenya, you know about M-Shwari, which was quite a revolutionary credit product launched by CBA Bank, now called NCBA, and Safaricom, where they extended loans through people's phone, right? So based on your mobile money behavior, based on what you did on your phone and all the transactions, call logs, and a whole host of other data points, they were able to credit score you and identify how much to lend. That's just the tip of the iceberg, right? When you look at SMEs, there's all this rich data around inventory, around deliveries, around potential vendors that they pay that they can slowly start tapping into. So this is, I think, one possible solution. There are products out there. I think companies like MoneyPoint has something out there using POS devices, if I'm not mistaken.
Transaction data.
Right. So that's the here and now. Looking ahead, where I think the ball is going is really around the stablecoin place, right? So the biggest, I think, destroyer of real value, I think, is a lot of the money movement that we see on the continent. Again, numbers tell us anywhere from about 5 to maybe about 9% is lost in transfers, which is a huge amount, right? And stablecoins really has an opportunity to bring the cost down to zero. It addresses issues around liquidity, settlement, so on and so forth. There are, of course, dangers to this, which is stablecoins are typically US dollar denominated, which means that central banks start to lose a key lever when it comes to applying some kind of monetary policy. I won't talk about that because I'm not an economist, but you can see how a whole host of US dollars that everyone's interacting with can potentially have a negative impact on the Naira or the Kenyan shilling and so on and so forth.
Yeah. So Yinka, I recall we had this conversation again around the stable coins and how we can stabilize currency flow. And so I'm thinking if we want to scale on the African continent, it requires the movement of goods and money to move freely. Do you think in this day and age it is really happening? And what is blocking this, and what can we do to unlock it?
I think when we think about Africa, we always talk about 54 countries. I think within Nigeria itself, there's 200 different languages. So like when you think 54 countries within the largest country, and it's 200 different languages. It's hard for you to now say, how do you get everyone to use the same currency? How do you get everyone to use the same customs regulations? I think it's what these economic blocks try to do, but they're also volatile, right? ECOWAS just lost 2 members just recently.
Actually,
3. Good to know. But like, I think Nigeria is the president of ECOWAS right now. But anyways, it's okay. But I think when you lose that, I think it's hard for you now to say, if I was part of the ECOWAS regional bloc, I was able to move goods freely, relatively. Now, if you remove those 3, if I had businesses in those 3 now, I have to figure out how do I now move goods into those 3 different countries using 3 different type of regulations, licensing. It's really tough. So no, it's not happening right now. But I also don't think we should expect that it would. Like, you think about a country like India. India, everyone talks about how big India is and how they're driving exports. It's one country. They have one currency. They have one set of regulations. So, of course, it's much easier. So I think for us to do it, I think it actually requires innovation in the private sector. I think regulation is always a lagging indicator of innovation. But the private sector, what you said about stablecoin, I think what it's done is allowed entrepreneurs, even around creators, to be able to take funds in US dollars. That means I'm not susceptible to Naira going up and down. I have some sort of stability. And what that allows you to do is you can move funds cross-border. Goods is always going to be hard. There are innovative ways. I've seen folks that have leveraged, like to move goods, they rent out the luggage area in airplanes. So I no longer have to figure out how do I move from my goods from Togo to Ghana. I'll just rent luggage space in an airline that already has that know-how. And I think those are the almost innovative ways we have to like daisy chain the movement of goods and funds. But I think there are innovators and there are startups that are solving for it. I think over time it will start to scale. But it's going to take time. It's 54 different countries. I think it's going to take time. But you're seeing indications of it. And I'm excited about that opportunity. I think I told you, stablecoin, like I feel like it's such a big game changer because now funds can move freely. Goods might take a little bit more time.
Yeah, indeed. So when I think about, years ago I lived in Senegal, and it was, I mean, there's EcoBank in West Africa. It was actually very difficult for me to transfer funds from my EcoBank account in Ghana to EcoBank account in Dakar. But now I see that MTN Mobile Money is doing tremendously well.
Yeah.
In East Africa, M-Pesa, I think they're also doing, their profits are crazy. But then when it comes into the governance and regulations, Didier, this question is actually for you. Do you think regulations provide a smooth pathway for African tech companies to thrive, especially around maybe the central government or the central banks, etc.?
You're trying to set me up.
Success.
My regulator
I'm trying to
could be
set you
here.
up for success.
Of course, yes, they do. But yeah, I guess it's a lot. It's very nuanced. So, what are regulators trying to do? They're trying to protect an industry, ensure that whatever consumers have to consume goods from a particular industry are doing that in a safe way. They're protected from whatever exigencies that could happen, and where those structures exist, then you have to operate within, where the laws exist, where there are clear policies, you have to operate within that. Yeah. It could stifle innovation, right? So there are times where it's like, oh, the regulation is all clear and sorted, and you can only do this. And there are times where the regulation is not clear and sorted, and you're doing this, but then someone wakes up and says, hey, you can't do that, and it's very erratic. So the question then is, what do you want? Do you want there to be clear regulation, or do you want there to not be clear regulation? But where you then end up is where, unfortunately, only companies that then get to, well, the size of MoneyPoint then invest in those kind of things, which is collaborative regulation, right? Collaborative policy making, where you're working very closely with the regulator to ensure that whatever decision is happening, you're doing it together and it's for your benefit. But if you even look at Africa as a whole, the financial services industry is one of the very few that has gotten investment in terms of like just regulation. So there are a lot of sandboxes in Nigeria, in Kenya, in Ghana. There are a lot of sandboxes that allow financial services startups experiment. There are not a lot in other industries. And you look at the energy space, you look at health, you don't see that. But if in the UK, the Office of Gas and Electricity Markets, they have an energy sandbox that allows small startups experiment. You can do things. You get that validation you need. And so what I see, the opportunity I see here is regulation. I guess other industries just learning from financial services. It's not, there's still a lot to perfect in financial services, but they've done a lot of work. They've worked with a lot of startups. It's a risky industry, but yes, they've done a lot. And so the health space, I spent time looking for healthcare sandboxes in Africa, and there are not a lot of them. So how do you allow, or how do you give the opportunity to startups who want to do things in that space to even experiment and thrive? So yeah, it's really about us learning from, I know Singapore has they have a sandbox for food. So if you want to build things around food, I know EU has a sandbox for AI, but we don't have a lot of that. And it's just thinking, how do you build sandboxes outside of financial services and allow people experiment and thrive within a safe space?
Yeah. And I think, Abdigani, you mentioned this the last time we had a conversation, that central banks actually, or the financial institutions are actually one of the most innovative, or encourage startups and encourage creativity and innovation in that kind of space. Can you give us a little bit info on that aspect?
Yeah, I think one particularly well-known example is the Central Bank of Kenya. Kenya's getting a huge shout out today. So what they actually did was, this was perhaps a decade ago, they created an open-ended policy for Safaricom to experiment with M-Pesa. So, back then, mobile money was a very novel concept, right? And the central bank made an effort not to over-regulate it. They took a laissez-faire approach and said, let's see what happens here, and then we'll let regulation catch up with it. And they were able to run quite fast, experiment, see the impact that mobile money could have in terms of moving money from one part of the country to another. I think many of us have read the case studies around how much time it takes for people to move money, and the economic impact on it, and time, and so on. So the central bank took that strategy, they allowed it to move forward, and what you've seen is other countries, other central banks follow suit, where now they not only provide that, but also have started creating sandboxes. I know Ghana has created a sandbox for fintechs and others to slowly start experimenting. A lot of governments on the continent are looking at central bank digital currencies, so stable coins and local currency stable coins, which I think is as innovative as it gets. So there isn't a lack of talent, a lack of vision. A lot of the time, it's just lining up all the different stakeholders to be able to execute, and given the ecosystem the freedom that they need.
And an example similar to M-Pesa in Kenya is agency banking in Nigeria. So the central bank was very deliberate about, and agency banking, for people who don't know, it's like human ATMs. So instead of a bank, you have very many people in many areas who serve as financial services institutions in a way, and then they help with transacting. And what we saw, it's the agency banking framework came out well over a decade ago, and people were able to set up companies that allowed for this to happen. And then what you then saw was it actually helped digitization, because in the past, someone who lived far away from a bank would get paid, take the money out, and put it in their house. When they knew that they could take it out from someone close to them, they started leaving it in the bank. And so what then happened was the monies were left within the system. You could trace it, and today you can still trace it. So whether I'm taking it out of an agent, at least you see that it's being taken out there. Everything is digital. There's a trace which helps the economy as a whole. So that's an example. Agency banking is mobile money for Nigeria, by the way. I think you gave that example, but you didn't know what Nigeria had. So it's agency banking, and it's human ATMs. Amazing.
Abdigani, do you think there's an impact on culture and on corporate governance within the African space when it comes to tech? Are we incentivizing people enough for them to invest in their companies, or for them to still stay within the continent to build long-lasting tech companies?
This is one of those questions where you have to tread very, very carefully around.
You're in a safe space.
Chatham House rules. So, when I was a student, one of the things our professor of organizational behavior used to hammer into our heads was culture is that thing that people do when you're not there, right? So, and I think Peter Drucker said something along the lines of culture eats strategy for breakfast, just to show that it could overcome most challenges and setbacks and advantages that competition had. And the reason why it's so important is because those first dozen or so hires into the team, if you're able to imbue them with the same culture, peculiar way of doing things, it ends up permeating throughout the whole organization. And I think any successful company has always had a peculiar culture, Amazon, Moneypoint, and others. And I think when it comes to corporate governance, this is coming from someone who's currently under an audit, financial audit. So if you run a financial technology company, every year there are audits that you have to undergo to show that you're safeguarding money properly, that things are being run in the right way. One of the hard lessons learned through that experience was setting up the company in the right fashion. So I'm not advertising Delaware incorporation or anything like that, but there are some company structures that are a lot more amenable to investment in the long run, a lot more easier to run, and a lot of startups go to Delaware because of the filing, because unfortunately almost all capital is from the US. It's a lot easier to raise capital in the US. That kind of setup and having some foresight into how you're going to structure your company is really critical. The other thing I think that is a bit of a soft spot for me is around employee stock options. From my experience, and this is a very limited number of companies that I've seen, this is where I think companies on the continent really do need to do a better job, right? I've seen cap tables where there is a slither of employee stock options, right? Employee stock options are critical for a number of reasons, right? Number one, they incentivize, team to stick around to see the vision. It's also a key, driver to make people feel like they're an owner, right? Typically, you allot around 10 to 20% of the entire equity in the company to an ESOP for all the employees. Of course, how you divide it depends on the role and so on. And in my experience, I think that's something I've seen a few companies that's been largely ignored by founders. But again, this isn't. I don't think this is just the founders' issue. I think it's also an understanding on employees, the value of employee stock options, how it could potentially be worth quite a bit. And it's really important when we think about the cycle of money into the ecosystem. It's through these employee stock options that people are then able to, maybe go off and do another startup or use that money to invest in other startups. I can talk a lot about this, but I think I'll probably let Didi or Yinka jump in.
I was going to say, I think culture becomes super important. I think I've done 10 different countries, and it's really hard for you to kind of maintain that Amazon culture, but adapt it to the country. And so from my perspective, very similar. Like my first 10 hires are always very important, and they take the longest to hire. I think it takes me 9 months and a half to hire folks on average. And it's because I'm very ruthless in who I hire, because the work that we're doing is work that if you hire the wrong person, you can ruin the foundation of what you're trying to build. And I also always hire local, because I'm already in America. If I come to another country and I'm hiring a bunch of Americans, they will take an American perspective. So what happens is you have that balance where I'm obviously 10 years at Amazon. I have that Amazon culture. And what we try to do with those first 10 hires is to rebuild what that culture looks like in that country. When we launched South Africa, we always come up with a set of guiding principles. One of the guiding principles we came up with is, What No Get Enemy. If you know Fela, you understand that song. But essentially, it's just trying to preach the fact that we are flexible like water. I mean, Bruce Lee, all this. So we just took that quote and we essentially just imbibed it into us, because it required us to be flexible in our thinking so that we can build what was right for our customers in South Africa. And I think that becomes very important, because once you have that strong foundation of culture, you essentially have a Navy SEALs team that will go and run through a wall and get things done.
Amazing.
So, yeah.
Yeah. Did you want to chip in on something?
Interesting. We're in the process of, MoneyPoints is over 3,000 people, but we're not as old, and we've not been here for too long. And it's something we're actively working on, which is how do you scale people? And so we developed something last week, which was shared with the company yesterday, actually. And they're called judgment dimensions. And essentially, how do you know who a good MoneyPoint employee should be from the jump? And some of those, one of it is, because we had core values, but then the question we kept asking was, how do you move from core values to, how do you see those values in people from the jump? And so one of the things we moved from, one of our core values was grit. How do you translate grit to a judgment dimension? And for us, one is ownership. So has the person been able to see things through? But also it's urgency. So do they do that with disciplined speed? And yeah, we've been looking at that. We've been looking at it for a bit because the company has gotten bigger. A lot of us don't know who works here. Yeah. But how do you ensure that we remain the A players? And there's something around A players, actually. I'm trying to remember, but like, if A players don't hire A players, then it just keeps getting diluted as a whole. So, yeah, for us, right now, it's just ensuring that we can bring those judgment dimensions to life and ensure that everybody that's hired, because you also don't want to get people who were on their own. They didn't force you to hire them, and you hire them, and then you say, oh, hey, you're not a fit. So,
the famous cultural fit question.
Exactly. So for us, it's just, if you pass through that, then we know that, okay. And then we also came up with something else, actually, to help us then. If something is not working out right, you look at it and you say, is this a people problem? Is this a structure problem? Is this a governance problem? Is this a context problem or something like that? No, is this a goals problem? And that way, you're then able to see what exactly is the problem and how do I fix it.
Awesome.
But yes, half the time it is, do you have the right models that are driving your organization? And then culture. And culture essentially is those things that, culture, layman terms, the things you tolerate, to be honest.
Amazing. Now to our amazing audience, I'm going to take 3 questions in rapid succession, being cognizant of time. So I see one hand there. So 1 female, 1 male, and the one in front of me right there. I'll be damned if I didn't mention it. So can the microphones go around? The first one is up there. Yeah, okay, go on with the questions. I think we'll take all 3 and then we can tackle them so that we don't lose time.
Thank you very much.
Oh, you can please take your seat.
I'm happy to stand. Is that okay?
That's all right.
Just in case.
It's your preference.
Yeah.
Okay.
Oh, my name is Otega. I run a group of companies, but I'm going to speak about one of them called Blue Bull Research and Consultancy Limited. And what we do, we consult into the UK government. So just a couple of days ago, I was at a CCS event, and I noticed you mentioned how the UK government actually encourage small businesses to engage and buy technologies from them. But something else the UK government does is encourage SMEs, primes, which are the big firms, to integrate SMEs to contracts as consortium. And I know your company is quite big. I want to know how you are encouraging small businesses to engage with you, how you are supporting them as a big prime in the banking sector, but how you think, for instance, African governments, especially as they give big businesses to foreign companies, can encourage those businesses to partner with local businesses. For instance, in Nigeria, the Nigerian government just signed a deal with France to run our taxation system. And I actually tried to reach out to the company and the government of France to see how we as a small digital transformation business can support what they are doing in Nigeria. Thank you.
Thank you. Yeah. Can you please keep your questions brief and concise so we can answer all of them? Brevity.
My name is Aisha Agbolaji, and I'm a student at the London School of Economics. I study social and public communication. I want to talk about a bit further down the product life cycle, and my question is for Edidiong. So I recently watched the story of MoneyPoint, and obviously, as a Nigerian, it was a total upheaval of traditional banking system. You send a MoneyPoint transfer, and it's gotten to the vendor immediately. Once maturity got to the product, right, you start to see the competitors coming into the same sector, into the field. The traditional banks are also now doing the same thing that MoneyPoint is doing. From a communications and marketing standpoint, what exactly does it take to stay afloat? Because I know this is your forte.
I see that all the questions are geared towards Didi. Didi, you're in trouble. The final question.
Hi, everyone. Thank you guys for a great panel. My name is Chioma Aga. I'm a physician founder, and I'm doing a diploma here in Oxford, AI in Business. And I guess my question is for Yinka and Didi and Abdi as well, but yeah, Yinka a lot. So when I was in Lagos, I'm in Dallas now, but when I was in Lagos, I had an e-commerce company around the time we were doing the cashless adoption. And one of the things I found, especially with Konga as well, was the issue of pay on delivery. And so in my mind, I feel like one of our real innovative constraints in Africa to scale fast is a weak trust infrastructure. We don't trust ourselves. And so beyond obviously the policy and the barriers to doing business, so my question really is, should development efforts prioritize funding startups or building the underlying trust systems that allow innovation to scale in the first place?
Hey, wow.
Wow.
Hey.
Would you start maybe with the gentleman's
I need
question?
time to.
Yeah, so that he can.
Okay, cool. Just so that I'm clear on your question is how do startups like ours support smaller startups? We're still struggling.
High level.
I think largely we work with a lot of smaller companies, and I'll give you an example. Oh, sugar, I was going to say we acquired a company, but we haven't announced it. But I would still give that as an example. And the more we've grown, we have an M&A team that sits down. And the M&A team isn't just working on acquisitions, right? They're also working on, partnerships with smaller companies who are doing things that we would benefit from. And every time they go into markets, they go to conferences, they go to different places, they're trying to identify what companies exist, what are places where there's a gap within MoneyPoint. Now, the company that we've just acquired, we had built a product, but the product was broad. Now, this company was doing something great at one part of that, something that was bespoke, but still fit into the product that we had built. And we saw it, and actually we had a customer that we tried to get, and the customer was like, nope, I'm not leaving this product. And so we bought the company. So two things, have customers that will
Customer acquisition. Yeah.
but also identify companies who are not doing as great at that thing that you're offering. Be the best at what you're offering. Go to them. If they see that you're the best at what they're offering, of course. And so we partner with companies where there's a lot more value, because half the time when smaller companies come, they're not giving you as much value. So it's like, okay, why should I talk to you? And sometimes it's like, oh yeah, we're smaller. But yes, you don't have, my customers are your customers. So how do I gain anything from you? But if there's a world in which you were able to get this big guy that was not leaving you, and MoneyPoint is like, okay, fine, I will acquire. It's so funny. I'm waiting for the day we go to the customer and we change things.
I think, Didi, I'm going to veto here because I'm the moderator.
Oh, yeah, sorry.
So we can take it offline after the session.
Yeah.
I want to answer the marketing and communication question from the lady there briefly, and then Yinka will sum it before we just jump out. It's time.
Yes.
Sorry.
Unfortunately, we're going to have to put a pause because we're over time. Thank you so much, though.
We can talk about it after, yes.